All right, guys, welcome back. Stock market technical analysis video. The reason why I put out these videos and talk about levels where I think things are going is because when it actually happens, I can't get a video out in time to show you that something's happening and hold your hand. So the most I can do is tell you where I think things are going, show you the levels, and then when you start to see those things actually happen, you can take action. Again, everything in this video is just my opinion, but that's what we're covering here in this video. So in the videos, the last couple of days, I put out videos saying, okay, I think we're going to get a little bit of a bounce. I was looking for, on Qs here on the chart, 275. That's really where I was looking for it to go. It doesn't look like we're going to get that. So I saw that start to fade, covered my long position or closed my long position. I got short again, and we're riding this this wave down. Now, this is what I said I thought was going to happen. I thought we'd get a little bounce to 275 and then continue the downside selling. Downside selling stepping in early, and they're selling it down. So everything today I'm seeing is pretty bearish. We've got, looking at the hourly chart here, still have some divergences intact. They haven't been burned through yet, but we'll see. We've broken a couple support levels today. So if those don't recover, that level being, it's about this 267, 69. If you look at the 1 minute though, my level might be off slightly. You can see here we had, this is really where it held, was right up there at 267.75. We tagged it right there, held it, bounced a little bit, so it looked like the buyers were going to step in and hold, and it started to bounce, and then it rolled over. And when we broke right there, now we've been selling off impulsively. So we've got a breakdown of support, continuing to sell down. Another thing I was watching, well, before I get on to everything else, let's look at where I think this is going. So again, purple zone right here, 254 down to 251, somewhere in that zone I think we're going to go. And what's that going to do on the weekly? All right, again, I'll point it out. Here's your uptrend, your bull market going back to 2009 in tech. So here's the upper end of that range. A breakdown to this level will recapture that channel, so what I think is going to happen is we're going to break down to this level, recapture the channel, bounce off of this level, run up and tag the top of the channel again, and then start to work our way lower. Now that's longer term calls. There's, opportunities to trade both sides during that. But I think ultimately from a swing trading perspective and a longer term perspective, I think we're heading down to the bottom of the channel, and then we'll have to see where things go from there. So again, breaking down, looking weak. So, unless they pull a rabbit, unless they can basically just recover this and, pull a magic trick basically, then I think we're going lower. I think the bounce is done and we're heading lower. And we didn't even get to the measured target. If you look at the wedge, the widest part of the wedge here, the measured target would have been about that 275, and they stepped in early. So, read that as bearish. The sellers were just waiting to step in. They're now stepping in. All right. Another thing that was interesting, I wasn't seeing volatility spike as we started to break this level. I didn't see any volatility spike. I actually added to some volatility prior to, when I didn't see that spike, I bought some volatility because you should see spiking volatility. So people are starting now to realize, I think, that the more selling's coming, and you should start to see a spike in volatility. Here's UVXY. Here's the daily. You're starting to get volatility spiking. So this, to me, looks like it's going to continue higher. Where do we go from here? Well, we could easily run up to this 46. Depends on how bad the sell-off is and how fast it comes. If we sell down to that level on triple Qs, down to, this range here, then that could be enough to spike volatility all the way up, to like 46 or so. So we'll watch for that. I don't think volatility is getting back up to these levels where it was in the March sell-off. I don't think this sell-off is going to be that impulsive. I think we'll stop around that level. So watching for that. Another thing that's breaking down is Tesla. So I added to some short. Now we'll see if it can hold. You know, it's just barely breaking down, but you can see here on the hourly, we're starting to break support. Here's your support line that I have. This is going back to March. We've just been walking up this trend line here. Several tags of it. What Tesla does is it tags support and then just spikes higher. Tag support just runs higher. I mean, each one of these rips have been about 100%. You know, that one was 90%. This one was, you know, about 90%. Expect some of the same price action to the downside. You know, when you finally get a break in this, expect this to break. So does this prove to be a false breakdown? We have yet to see. Could be. We'll find out more tomorrow, possibly. But you know, if tech's going to break down, Tesla should break down with it, and you'll probably get a gap down in Tesla if that's the case. So Tesla looks like it's going to break down, and what I would say is if tech continues to break, Tesla's going to break. So look for a nice impulsive sell down. I'm targeting these gaps right in here, 247, 223. That's kind of the near-term target, and that's a drop of about 40%. So that is the near-term target. Gold continues to work its way to the target, 1790. I've been talking about this level for a while, saying I think we're heading to 1790. Pretty obvious now, I think, that it is doing that. So would have to pull a real fake out if it's going to recover this. The highest probability is we're heading to 1790. So dollar is breaking out here, heading to fit 95. Pretty obvious there as well. You know, I don't think we'll get right up. I don't think we're going to run all the way there. We might run up there, do a little back test, but we'll have to see. You know, there's been a big consolidation in the dollar. It's been holding, so the breakout could just be pretty impulsive straight up. We're watching that. But so far, everything is you know, doing what I've been talking about in several of my videos. So again, I can't always put you on a trade the moment it happens, but what I can do is prime the pump so that you're aware of what might happen, the levels that are important to the market, and then when you see that, you can take action. That's really all that I can do in these videos. Apple breaking down. Apple's got a little bit of this on the hourly here. We've got a little bit of this downward channel, so maybe we're going to break down. But, you know, if we break down here, pretty good fake out that I see, because we had this false breakdown right here and it recovered. And so if it breaks down again, that was a pretty good trap, because it shook out anybody who was short. When they saw the recovery, they got out. And then, you know, if it sells off, pretty good fake out move there. So we'll continue to watch that. What else is interesting? You know, XOM. I took a trade on this yesterday, covered it today. Or, I mean, I was long, so I sold it. But it just wasn't doing what I thought it was going to do. So here's the daily. And I thought we would start to hold some sort of support. But you can see today, this is broken down from this wedge. So I think that we're going to have another drop. Looks like we're heading down to this 33.58. And so, you know, took a small loss on that. I entered right here at support. And when we broke support, covered it. So about 1.5% loss. And that is the name of the game. Keep your losses small. Another one that's interesting, PAAS. I've been talking about this one for a while. Hit our first profit target today, right here at 30.50. So probably get a bounce here. And that looks good for a continuation, but you know, this is not the area. We didn't quite get there, but close enough. So I think that we probably get a bounce here. And then, you know, we'll have to see what happens. But gold's got farther to go, so I think this probably sells off some more as well. So you can see how this works. You know, typically you mark out your levels, and when you're shorting, it will just keep you in limbo, and you don't know if you're right. It'll stay there forever, and then just in one swift action, run right down to your profit levels. And that's the name of the game when it comes to shorting. You know, you're wrong 8 days out of 10, and then on those last 2 days you're right. And that's kind of like here, when you're shorting here, it just keeps you, it keeps you in limbo. It's bouncing, it's going up. You're wrong. You don't know if you're right. And then in the last 2 days, just dumps down. And I know this was more than 2 days, but I'm just trying to iterate in proportion to this whole pattern right here. Most of the pattern was a sideways pattern, kind of holding support. And then in the last little bit of the pattern, it just breaks. And that's how shorting works. And so this could easily run all the way down here and to our final profit target of about $26. Some commodities like corn I've been pointing out. I'm completely off commodities right now. I'm seeing breakdowns in the markets. The dollar's rising. That's bearish for commodities. So the run in commodities might be over temporarily, or we might come down. Corn could come down to the support line around 1230. That might be an interesting area to go long again. But as of right now, I think we're going to see a little bit of continued selling in the markets. And the dollar is rising, so that should continue to put pressure on commodities. And what are bonds doing? Bonds are selling off today. Again, the bond market it's just not a good it's not as good of a signal as it used to be. So we'll see, but bonds are selling off, market's selling off. Not a good sign in general when you have no flight to safety and there's just discriminate selling across the board. Gold is being sold. I mean, right now the dollar is the only flight to safety, but gold, bonds, stocks, they're all being sold down. Okay, that's really all I have. Oh, we can look at financials real quick. Continued weakness in the financials. So financials actually really were forecasting some of the weakness in tech. Financials broke and they've been starting to sell off, and tech was still holding strength, but now we're seeing tech starting to sell off. So in general, we're seeing weakness across the board, and I think that's going to continue. I talked about this trend line in tech being broken right here, and the reason why I was so focused on this, because this was the only level of strength, and tech has the market cap weighting to hold the rest of the market up. Even if financials continue to sell off, the market's not going to sell off until tech breaks. Even though financials selling off is potentially forecasting tech breaking, when tech breaks and those big market cap weighted stocks, Apple, Facebook, you know the deal. When they break, the market will break too. So financials were forecasting though tech breaking, and financials continue to be weak. So we might have seen the end of what this I think this is a bear market rally, and that's what I thought that this whole entire rally was. Perhaps this is the end of it, and now we start to see the, stocks make their way lower. Now again, bear markets, if this is going to be a bear market, I think it is, then we ride the slope of, we follow the slope of hope. So you fall sharply and then you get a rally, and bear market rallies are usually pretty impulsive. Then you fall again, you get the rally, and that's how it's going to go. Someone also asked me before I finally wrap why I've been so bearish on this channel, and I'm going to point it out again for anybody that's new. This green line right here is the bull market of the last 12 years, basically going back to 2009. 11 years, basically, almost 12. Going back to 2009, this green line on the weekly chart, so this is a long time frame, marks your bull market. And so you can see, here's your lows. We tagged it right here, tagged it here, tagged it here, tagged it right up in here. And then in 2018, we broke. Well, I started my YouTube channel in 2018. So this is why I have continued to look for shorts, because the bigger trend has been broken. Now, yes, there's been opportunities for longs, but I see this, I try to keep in focus the bigger picture. And to me, it looks like the bigger picture is we're going lower, substantially lower from where we're at now. It's not going to happen all at once. I don't expect it to just plunge like we saw right here. I expect it to work its way lower over time. So consistently making lower lows and lower highs over time. On a weekly chart, and this is really just a topping pattern. When you break a big long bull market, it's not going to just usually roll over. You're going to have a lot of volatility and a topping pattern, and that's what this is. So when I point this weekly chart out and say we're in a bear market, I'm talking about the next couple of years. And, you know, it's going to play out over the next few years. It's not going to happen in a month, or, you know, it's going to take years for this to play out. So that's really the longer term thing. But since I think we're in a bear market, then I look for opportunities to short, because I want to short in a bear market. I want to be long in a bull market. So I want to short at resistance in a bear market. I want to be long at support in a bull market. And that's really, that's what I'm seeing. So could be wrong, obviously, but the chart is telling me that it's just been the big long topping pattern, and the Fed's created both of these rallies. The Fed's come in here and done a bunch of money pumping each time. So the Fed's not going to come in and do more money pumping after we get a 10% sell-off. They're going to wait till you work your way lower. They're going to jawbone it up. It'll have some rallies. It'll go lower. And the Fed will come in and do more money pumping when we get down in this area. Okay, so that's what I got for this video. Thank you, and I'll catch you on the next one.